Hello and welcome to BloombergQuint. You're joining in this special broadcast after a massive news has hit the banking industry in India. The government has placed restrictions on the cash-starved Yes Bank by imposing a moratorium on the bank. Essentially, what the government is saying that no legal proceedings can be initiated against the bank during this moratorium, which is going to last between the 5th of March and the 3rd of April 2020. Apart from this, the bank has also been restricted from giving out any deposits beyond 50,000 rupees. So customers or depositors cannot withdraw that money from their account beyond that 50,000 limit. Of course, the government as well as the RBI in conjunction, they have said that there are certain specific conditions or certain exigencies where customers can seek a higher withdrawal from the bank. This can only be done with the prior written permission of the Reserve Bank of India. Apart from this, the RBI under its own powers has already superseded the Yes Bank board and has also placed an administrator who is Prashant Kumar, the ex-DMD and CFO at State Bank of India, as an administrator for Yes Bank, and he will be looking after the daily workings of the bank. Apart from this, the Reserve Bank of India under its powers has also stopped the bank from giving out any fresh loans and incurring any large expenditures that ranges beyond 50,000 and beyond certain specific expenditures with the bank, which the bank is required to make, such as salaries as well as some other utility payments. Apart from that, all other expenditures cannot be incurred by the bank, is what the Reserve Bank of India has said in its notification. Now, to discuss this further, we are joined with Abhishek Devanji from EY. Mr. Devanji, let me first ask you, I mean, this is probably the first time a large private bank in India is facing such major restrictions, as well as seeing its board being superseded. Mr. Devanji, can you hear me now?
Yes, I can hear you now.
Yeah.
So interesting, Vishwanath, interesting situation and development. I think, and I would like to think, that this is a precursor to a larger capitalization transaction because while Yes Bank has its sets of loans, unlike other institutions which were fraud-ridden, I think Yes Bank is a situation of bad credit decisions as against a fraud-type situation that we've seen in other cases where the RBI has taken over the entities and decided to put in an administrator. So I think here it is not about as much about change in management as about the change in capital structure. But in the interim, had there not been a moratorium, there would have been a run on the deposits from the bank, possibly because of the panic, because of the lack of investor, or there would have been a hasty decision in terms of trying to capitalize it or merge it into a PSU bank. So what I do see happening now is that this is, in my view, a short-term breather to Yes Bank to possibly sort out their issues very quickly. I do think still that this moratorium period just gives somebody enough time to sit back and think. But ultimately, before an investor comes in, before a capital structure gets corrected, there will have to be some kind of a tier 1 supplement into Yes Bank.
What form could that take, Mr. Devanji? You said tier 1 supplement. I mean, obviously, clearly the bank needs capital, and the RBI has issued a separate statement as to why exactly it went ahead with this decision. It is said that in the absence of a credible revival plan by the bank's management and to protect the interest of the depositors of the bank, the Reserve Bank of India was forced to approach the government to apply this moratorium and then, of course, later supersede the board. What could be that mechanism through which the bank can be kept, working? I mean, obviously, no fresh loans can be given out by the bank. That restriction has also been placed by the Reserve Bank of India, but to continue its daily activities.
So one thing is that if no fresh loans are going to be given now, the big risk is that the NPA situation can escalate quite significantly. In the absence of any decision-making around workouts, or immediate decisions around workouts, there could also be a further impact on the balance sheet and deteriorating asset quality. So, I do believe that banking in a way is a perishable commodity. What would need to be done very quickly is this moratorium should just be a time to think through as to what needs to be done. A tier 1 supplement, and you asked me the question, what do I mean by tier 1 supplement? I would mean something like an AT1 bond.
Okay.
Maybe a convertible 81 bond, if that be the question, because it needs to be perpetual. An 81 bond type structure comes in and capital gets supplemented and the business under a new administrator starts running, starts operating. And in that process, the share prices would get corrected over a period of time. The bond conversions would then happen, and then the capital structure would stand corrected. So ideally, first, have a breather, which I think the RBI has done. The next progressive step would be to put in some capital, put in possibly a better board, and or a government-administered board with the intent of restarting operations. And in an interim, while the moratorium lasts, a process would then be to correct the capital structure to get in a shareholder. That, I believe, would be a positive solution. Else, of course, the other option is to merge it into an existing bank.
Right. So merger into an existing bank. Earlier today, when there were news reports about a potential bailout by State Bank of India and LIC together for Yes Bank, a lot of analysts had pointed out that, invest by all means, but please do not merge the bank with your balance sheet. I mean, that could be problematic considering the high level of risky assets on Yes Bank's portfolio. Is your view that mergers in this current condition would work better than, say,
No, I believe a revival would turn better. I believe a revival would work better. So interim capital pushes to correct the capital structure and then get new capital in to revive the bank would be a better proposition than to simply say that we should merge it into the bank.
Right. Just to get a view also on the current condition, I mean, we've seen these developments happen with cooperative banks. Almost all of last year. We also saw a large housing finance company, DHFL, go through something similar where the board was superseded and, of course, eventually insolvency was initiated in the company. What does this say about India's financial sector? I mean, the RBI has been very clear that India's financial sector is healthy and that there's nothing going wrong with it, or there is no systemic issue at least. What is your view? Do you still believe that this is a very limited, specific problem which is limited to certain entities?
Yeah, so I think the institutions which have faced problems, if you look at the bank, Yes Bank now, or if you look at DHFL, the issue there were very, very different in each case. The first two cases, I think there was also fraudulent activity to a very large extent.
Right.
The third case, the case of bad or aggressive credit decision making.
Right.
All the same, the problem, the underlying problem to all of them has been a lack of adequate capital to be able to cover the losses. And I think that is the big reason why these institutions have failed. And I don't think this is systemic because if you look at the rest of our banking system, it's reasonably well capitalized. Private sector banks, pretty much very well capitalized. In terms of the public sector banks, I think there is a line of credit available from the government. So I don't think it's a systemic problem. It is a sporadic problem. We have a few others who may still have this problem, like the banks like Lakshmi Vilas Bank, which is also put into a moratorium,
right,
or similar other banks. So yes, there will be one or two more, but I think it's a lack of capitalization. So ideally, the need of the hour is to see that if a bank has to be revived and a bank is in distress, and it does not necessarily have to go through IBC, what are the concessions that all regulators need to give to make sure some of these banks can have the right capital structure to survive? I think that is a point of discussion that will be more relevant now.
Right. Mr. Devanji, just hold on for a minute. We are also joined on the phone line with Ira Dugal, the banking editor at BloombergQuint. Ira, large set of announcements coming in from the Reserve Bank of India with respect to Yes Bank. I mean, just in about a year after appointing a member on the bank's board, now they've superseded the board and put in an administrator to run the bank for the time being. Abhijay, who was talking earlier, had a point that this is probably going to give them more breathing time and thereby take better decisions in trying to save the bank. What is your view?
No, I'm just going to briefly jump in and I'll let you get back to Abhijay. I think two or three things. One, must remember this is now the largest Indian bank to be put under moratorium. This is not a small United Western Bank kind of situation at all. This is a 2.5 lakh crore deposit-based bank. So, firstly, one must see how this deposit situation is managed. I would assume there are some informal lines that are available even to meet the 50,000 rupees deposit withdrawal limit that has been set. So I think the first thing is to ensure that this deposit withdrawal process goes through well. They have obviously not been able to work out an immediate solution. I think through the day we had heard about potential solutions with SBI, LIC, etc. coming in. It's not an easy solution because it's a large bank. So you can't outright merge it the way you did with United Western Bank or Bank of Rajasthan way before that, and others will be able to comment on that. So I think the big question of how long these deposit restrictions stay in place is still open. From the way the notifications are worded, it sounds like they expect this to be temporary. So maybe in the next few days, we will see that solution come about. If that solution comes about, then you will have a taxpayer bailout of a large private bank. And I think that has to be absorbed as well because there will be legitimate questions raised as to why taxpayers have to pay for this and why this should be done this way. But the reason it has to be done this way is because the FRDI bill is not in place and we don't have a proper insolvency regime for financial institutions. For the Reserve Bank of India, there are two things to think about. One, of course, as I said immediately, that this deposit or nervousness has to be managed very carefully. And two, they have to do a little bit of soul searching to see why it got to this. Because remember, till a year back, Yes Bank had some 3.5% gross NPA ratio. So, what went wrong really? Could this not have been averted earlier? The RBI has a prompt corrective action framework. I have been saying for months that should have been put, imposed on Yes Bank a long time ago. So there is some soul searching to be done there as well. Back to you guys, I'll let you guys.
I mean, with respect to the lending restrictions as well as some of the cost restrictions that the Reserve Bank of India has put in, those are similar to what restrictions banks would face under PCA, right?
In some ways, but it's too late now, right? PCA is meant to make an orderly sort of process of resolving any stress that a bank is under, but all of this is now an afterthought. So lending, what will they lend? I mean, they have to first fix their deposit issues, right? So they are similar, but they are after the fact and will not have the same impact that the PCA restrictions would have had, which would have been an orderly improvement perhaps of the bank situation. I do want to keep reiterating that depositor nervousness and the outflows that will happen just even on this 50,000 have to be watched very, very closely, and that is the first point over the next few days to monitor very closely for sure.
Right. Thank you so much, Ira, for joining us and giving us those points. We're also joined on the phone line with Ravikant Anand Bhatt, the research analyst for the banking sector at India Nivesh. Mr. Bhatt, just to get a view from you, from an equity analyst point of view, of what this means for Yes Bank, now that the RBI has put in these very strict restrictions as well as superseded the board, what does that mean for the stock?
Well, it looks like end of the road for the company. A bank being placed under moratorium, it's something which happens when every other effort, to turn around or revive has, failed. So, what I can make out is everything has been tried. I think the RBI circular is also self-explanatory, which has actually, detailed the kind of meetings that they have had with the bank, with even prospective investors, and what it has led to. And, after all of that, I think they have come to the conclusion that this needs to be done in the interest of the depositors. So, clearly being done more in the interest of the depositors. It looks like, equity investors will have to bear a severe brunt tomorrow.
Sure. Just to get a view of, earlier today there were some stories floating around with respect to SBI or LIC jumping in and trying to rescue the bank or create a bailout option. That option still remains on the table, right? Because that is not yet gone away.
Well, we haven't heard officially from. So I was until some time back continuously checking whether there's any release by either SBI to the exchange, mentioning this. But official, there still seems not to be any official word on this so-called rescue.
Right.
And So what we had heard basically was there would be a SBI-led consortium of investors, which I think initially led to the investors, including analysts. I was also there. I mean, we put out a client note saying that there's likely to be a substantial investment coming in. We still cannot rule it out entirely at this point of time. But what has actually ruined all those assumptions is the bank actually being placed under moratorium.
Right.
I don't know. I mean, where does it go from here? It looks likely looks like an end of the road.
Right. Let's just go back to Mr. Devanji from EY. Mr. Devanji, Ira pointed out earlier that this situation is no longer a United Western Bank type of situation where it was a fairly small bank that went into stress and therefore had to be corrected. This is a large bank, 2.5 lakh crore deposit base. I'm sorry I keep bringing this point back, but what does this mean for the banking sector, sir?
No, banking sector, what it means really is that first of all, in a situation where the country is facing such a grave NPA and coupled with their lack of growth, banking failures are bound to happen. And frankly, we should accept that. A problem is in our country, we don't have a regulated way or a designed way of rescuing or dealing with distressed banks.
Yeah.
FRDA is not there, DI is not there. We have IBC which can work. We try to work it in DHFL and see how it goes. But frankly, I do believe that this is a good measure in the sense that it allows one to think back and think through how the regulators can work together on a bunch of concessions for distressed banks to turn around. And I don't agree with the fact that public money is now going to be invested to bail out a bank. In the U.S., for example, they pumped in millions of dollars to bail out Citibank. I don't think that is a moral peril because we have deposit holders which are like, 5x of what the equity holders are. So I think there is a larger need to save the deposit base, and one should instill more and more confidence and show that there are revival abilities in banks.
Right.
So I do think that there is a need now to come up with comprehensive and not just sweeping under the carpet merger with an existing bank strategy.
Right.
But a slightly more different strategy around how to revive distressed banks. And I think we will do that.
I'm glad you bring up the depositors because that is going to be the next big thing to watch out for as to tomorrow morning once all these bank branches do open and and people do get out of their homes. The fear is that you will have to see how exactly that withdrawal is maintained. I mean, if you were to look at what happened with the PMC Bank, immediately there was a lot of noise by the depositors because it was their money, rightfully so. It was their money stuck in the bank and they couldn't withdraw it. Do you think that the bank will need probably some kind of additional liquidity window to ensure that whoever is coming up to the branches or the ATMs actually gets the cash that they want?
Well, I think yes, I think that the bank should make sure, and I'm sure the administrator will make sure so that keeps the confidence going that we don't have dry ATMs. But the important thing is that this is just a moratorium for a short period of time.
Sure.
And as I said, banking is a perishable commodity. So the sooner you revive, the more you will gain back. So I think that as against other moratoriums where we've taken a very, very long time, we don't have that luxury in the banking sector. So we need to do some things very, very quickly. So even after a bailout package, immediately a Tier 1 structure needs to be put in place, maybe within the next 15, 20 days, whatever. And bank needs to start its operations, revival processes, its deposit process, its churn process that a bank has. It's in the business of churning money. It should go on. And then the pricing or the capital structure should be corrected with a bunch of regulatory measures and a new investor should be brought in. I think this is what is required in the next 3 to 4 months. And if we can achieve that, I think we'll achieve it. If we not, then I think it will be a difficult situation for the country to follow.
Okay. Just one more question, sir, with respect to the investments that are being discussed here. Now, the Reserve Bank of India is saying that these investors who had approached the bank with an initial interest did have long conversations with the regulator, but it didn't really materialize into anything. Does that point to the fact that maybe the material position of the bank's loan book might be much worse than what the bank had disclosed in September when it announced its results?
So possibly it will be. Possibly it will be. The reason also would be that when an investor comes in, he would come in with in a fairly conservative point of view, as compared to the bank itself. So I wouldn't view that as a conspiracy, but I would actually say that people are trying to be more cautious. And of course, a structure that will have to evolve will say that if an upside beyond a level happens, it should actually go back to the original people who've taken the sacrifice. So we'll have to work on a bunch of measures towards that. No doubt about it.
Fair enough, Mr. Devanji. Thank you so much for those points. So let me just take you through what exactly has happened in the past 1 hour or so. Is that the Reserve Bank of India has put in some strict restrictions on Yes Bank. They've superseded the board, appointed an administrator at the bank. We've also seen the government announce a moratorium onto Yes Bank, which will last till the 3rd of April, starting the 5th of March. And this during this moratorium period, there will not be any kind of legal proceedings against the bank, but also depositors of Yes Bank cannot withdraw more than 50,000 rupees unless there are some emergency situations, which of course the government has also listed out. This includes, of course, certain medical emergencies as well as paying certain education bills. But unless it's situations like that, depositors will not be allowed to withdraw more than 50,000 unless the RBI gives a written permission. We're joined on the phone line with Mr. Vikas Khemani, founder at Canadian Capital Advisors. Mr. Khemani, just to get a view from you with respect to, I mean, this situation, probably the first time that a large private bank of this size is facing restrictions like this. What is your view, sir?
I think, the fact that there has been a problem in Yes Bank is apparent for quite some time. Bank has been trying to raise capital, I think for some time. Finally, I think today there's a proposal which has come about of SBI and LIC taking over 49% of the bank. So I think there are rescue measures being worked for the bank because it's a very large, systematically important bank, and the repercussion of its failure could be fairly severe across the system. So I think, in my opinion, it's a plan to kind of revive the bank. Of course, the depositor happen. If it has not happened so far, I'm a bit surprised to see that after SBI has decided, or after SBI and LIC taking over the taking stake in the bank, why this sudden restriction has come. I mean, I was kind of a bit taken aback with the news, but the regulator is working to make sure that depositors don't lose money and they're taken care, and banks somehow can be revived.
Right. Mr. Khemani, just to get a sense of, how investors should look at now the Yes Bank stock, because essentially today after the news items came out about SBI and LIC, the stock saw it rising quite significantly. I mean, a lot of people were clearly happy with those disclosures. But now that these restrictions are placed, I mean, how do you look at it tomorrow morning when the markets open?
No, I think this whole, to the best of my knowledge, the announcement of SBI and LIC taking over at 2 rupees came out post-market. I think through the day, during the market, there was rumors, some, plans being worked out. So maybe because of that, some short covering happening. The fact that bank is raising capital at 2 rupees, it clearly shows that the equity value of the bank is pretty much close to zero,
right?
Or at the face value. So I think to that extent, I don't think the current, price can be justified. But, markets being markets, all kind of things are at play. So one can really make a comment about. But this clearly indicates the equity value of the bank is either negative or zero or very close to nothing. So.
Sir, as an investor now, the bank has been trying to raise funds from the market from a number of investors for nearly a year since Ravneet Gill took over, of course. But so far, those plans have not really materialized. Even last month, when they announced 4 investors who had submitted a non-binding interest, it seems from the RBI statement that even that has not really materialized. What is probably stopping these investors from getting into the bank, sir?
I mean, clearly, obviously, if there was a value, I'm assuming, I'm not privy to anything inside, but if I were to just look at from outside, just a, bystander's comment, that if there was a, value they saw, I mean, you put non-binding bid, but if there was a value you saw, you would have gone ahead and done that investment. So the fact that that investment didn't happen and SBI investment is happening at 2 rupees clearly shows that there is a deeper hole than even the current net worth of the bank can justify. So possibly that could be the case.
Right. Mr. Kimani, thank you so much for those views. We are also joined on the phone line with H.R. Khan, former Deputy Governor at the Reserve Bank of India. Mr. Khan, just to get a view as to, probably the first time a large private bank of this nature is facing such severe restrictions, no lending, deposits being limited, as well as a clear moratorium by the government. Wanted to get your views, sir. I mean, in what situation would a regulator want to take such a drastic measure?
Yeah, because, this bank has been in news for quite some time, and RBI has tried quite a few things. They changed the CEO, they put a former deputy governor on the board. They had dialogue with probably the auditors. They asked for the bank for plan for capital raising and gave them time. But apparently, we have this history of divergences in case of this bank. And there have been in the past perception about SAR practices by the bank. And it's by quite large banks, so RBI would have thought 4 lakh plus or balance sheet size. So I think they have to act. So at some point of time they have to act, and they have acted, and probably next 1 month they will use to see what could be the scheme of reconstitution of the bank, because it must be the depositors' interest,
right,
and public interest must be in the uppermost in the mind. And I believe they must have had some preliminary round of discussion with some existing banks, whether public or private. I'm not privy to that.
Sure.
But there must be some plan in the mind of the regulator and the government. I think it will pan out over a period of next few weeks.
Mr. Khan, in the past, whenever we've seen certain private banks go into some kind of a moratorium or restrictions by the Reserve Bank of India, usually it is succeeded by a forced merger with an existing bank. Do you think that was something that's probably being considered at this point?
Quite likely.
But is it not good enough that you would have a market-led solution to the problem rather than a regulatory forced merger?
In most cases, if you've seen in an Indian example, it has been mostly regulator pushed, and so I'll not be surprised that some regulatory push is there. But some banks may find, even though the bank has some problem, but bank has a good franchisee, they have a good technology platform, so some of the assets would be good. So it is not that the people who take over will be totally loser. They will have some value for the investment. May not be immediately, maybe over time, and maybe they may get more than what they invest. So, in that sense, I would say the regulator probably thought that this is high time to put something in place so that it get resolved sooner than allowing it to fester longer time and create bigger problems.
Right, Mr. Khan, thank you so much for your views, coming in quickly with those some tidbits from the regulatory side of the story. Of course, we're also joined on the phone line with Mr. C.M. Vasudev. He's the former Economic Affairs Secretary. Sir, just wanted to get a view from you. Now, the government has put this moratorium on Yes Bank and has also said that depositors cannot withdraw more than 50,000 rupees unless it is a specific emergency. Just want to get a sense from you as to, in history, have we seen large banks of this nature facing such strict government restrictions?
Well, with Yes Bank, of course, one could see something of this type coming because it was facing a lot of problems and it was really scouting around for somebody to come in and buy some stake and take over the bank in some way or pump in some money, and it was not happening. And the bank was continuing to slide. So, and also, the market solution, as was mentioned just now, of course, is something which people would prefer. But then, when a bank becomes as big as Yes Bank had become, it is somewhat of a systematically important bank.
Right.
And for it to sort of go down and all that, and to have a run on the bank, I think RBI and government have very rightly stepped in at a good time. They have put this moratorium so that there is no run on the bank, and they will use this intervening period of a month or so, month or two, to get together some public sector type entities. I saw in the news about SBI, LIC, or some other consortium of public sector entities who can take over the bank, because neither the RBI nor the government, I think, can allow a bank as big as the Yes Bank to just go under like that. So I think they have acted in time, and hopefully within a month or two some rescue will be done, and there will be no run on the bank, and ultimately I think depositors' money is quite safe. It is only that for some time they will have to bear with the system, and this moratorium will do that job.
Right, Mr. Vasudev, just to get a view, I mean, eventually we are seeing what some people had predicted a while back, that you would end up seeing a taxpayer-led sort of bailout of a large private bank. Is that probably the best way to handle this right now?
No, I won't say that there is a taxpayer bailout at this stage. It is really, there is an underlying viability of the bank is there, and there's mismanagement type of issues. And as I mentioned earlier, there's a large bank of this size, the balance sheet size of the Yes Bank, which is pretty large. The financial sector shock that will happen if it was allowed to go under. I think any regulator in any country, I think, and the government also, will have to take that into account, that what is the importance of that particular entity for the financial sector as a whole. If it was just one other entity in the real sector making, manufacturing something and all that, it's fine, it can go under. But a bank with such a large intermediary between depositors and users of this saving, imagine the ripple effect that will take place if it was allowed to go under. So I think the regulator and the government has to be mindful of that. It is not like any other factory making some product. It is a big intermediary. So that is extremely important. That is why the world over there is the feeling that systemically important financial institutions should not be allowed to go under, because the fallout of their going under is across sectors on both sides, on the asset side and the liability side.
Right. Right, Mr. Vasudev. Right, Mr. Vasudev. Thank you so much for those views coming in quite late in the night once this announcement has been out. But yes, so that is what has happened with Yes Bank. It is currently facing significant restrictions from the Reserve Bank as well as the government. Depositors will not be able to withdraw more than 50,000 rupees. The bank cannot extend new loans or cannot renew existing loans according to what the Reserve Bank of India said. And of course, the board of the bank has been superseded and an administrator has been appointed at the bank. Now we'll have to see what exactly happens with the depositors once they start going out in the morning tomorrow, and how they deal with the situation. All of our experts have been saying very clearly that this is clearly a short-term sort of measure by the government to ensure that a solution can be found for Yes Bank, and thereby the problems can be resolved. Of course, we'll need to see how long this short-term measure lasts. According to the government's deadline, 3rd of April is when the moratorium lifts. But of course, the RBI's restrictions could last longer than that 3rd of April. Thank you so much for joining us on this special broadcast. Thank you so much for watching. Do log into BloombergQuint to read more about this story.